Hello everyone. This is the pre-market report video for today, 19th September 2024 for the Indian stock market in terms of Nifty and Bank Nifty. If required, please pause and have a look. These are the very important future projection macros were released last night along with the Fed interest rate decision. And then in the press conference, Fed chairman explained what does this number means, where economy is going, what's the status of labor market, etc. In fact, last night in his 50 minutes press conference, he touched all the subject and explained very clearly. Usually in the last previous press conference, he does like why he want to stand in that podium kind of. And always say the same thing like price stability and maximum employment is priority and will take decision based on the totality of the incoming data. Same thing in every previous press conference. But yesterday, that's not the case. As I said, he covered all the subject and he was calm. In a moment, we'll discuss what he said. But before that, I like to highlight one thing. Before this meeting, on the anticipation of 50 basis point interest rate cut, S&P 500 increased continuously before last night for the 7 trading sessions. Hence, it was very obvious we can expect some level of profit booking even if Fed performs 50 basis point interest rate cut. Isn't it? So, what happened yesterday? Please pause and have a look. Until 2 o'clock, market was very flat, waiting for the interest rate decision. Then at 2 p.m. Eastern time, Fed cut the interest rate by 50 basis points. That was not a surprise. Despite being in overbought region, the thing that turned US market positive was this future interest rate projection. Here, I don't want to bore by explaining everything, but rather I will discuss this current year end projection, but other projections like 1 year, 2 year and 3 year from now also worth to know. So please pause and have a look. Here, this is the interest rate projection for the current year end, and as per Fed at present they are projecting 4.4%, which is 75 basis points lower compared to June month projection, which was 5.1%. Regular channel viewers might remember this. Between April to June, Fed projected only 2 times 25 basis point rate cut this whole year. But last night alone, they reduced those earlier projected rate cut 2 times 25 basis point in a single FOMC meeting as 50 basis point. And on top of that, now they are projecting another 50 basis point additional rate cut this year. There are only 2 more FOMC meetings this year, one in November and one in December. So what it's now implying is, in those 2 FOMC meetings, we can expect 25 basis point rate cut in each. This more immediate rate cut projection made the US market to trade slightly positive. Then between 2:30 p.m. to 3:30 p.m., Fed chairman did his press conference, and during those time, US market was volatile but very narrow band because almost all the analysts wants hawkish statement. Like everyone, one way or other, asked the same question like whether he thinks economy is bad, so only he is reducing 50 basis point now and projecting more rate cut this year kind of. Then why he thinks labor market is okay, and what's his view on housing inflation, and what he thinks about last 3 months low monthly jobs data, like around 100,000 jobs added, etc. I will attach his press conference video in the pinned comment. If required, please watch. It's roughly 50 minutes. But for all those questions, he was calm and explained very logically. So only I think US market didn't move violently, but however, the final hour profit booking made it to close marginally negative. Now regarding his statement, despite the twisted question from the press, he said he is not at all seeing any recession or even elevated slowdown economy, and the labor market is strong and in the same level as it was in the 2019 period. Then regarding inflation, he projected as this current year 12-month average expect to be around 2.3%, and for next year the 12-month average as 2.1%. Both of them very close to Fed 2% target, but they don't believe inflation will fall below 2%. Then unemployment rate, in June month he projected 4.1% for the year end, that they now revised it to 4.4%. Hence, both interest rate projection for the year end and unemployment rate for the year end projection both comes as 4.4%. So overall, according to me, he delivered a speech like everything is okay, no need of panic kind of, and I think he did succeed at that. However, as I said, the final 30 minutes profit booking made it to snap the 7 straight session positive close. Dow Jones down 0.25%, S&P 500 down 0.29%, and Nasdaq decreased 0.3%. In case of VIX, it increased 3.5% and moved above 18. In line with that, today early morning, GIFT Nifty also reduced marginally and closed at 25,355. Equating it with our yesterday's spot market, it's indicating gap down opening of 30 to 50 points. Then regarding Indian ADR, in line with the Indian market, both the IT stocks down by over 2%, whereas banks closed positive. HDFC Bank increased 0.75% and ICICI Bank increased 1.67%. Arbitrage wise, no noticeable difference, so no indication of any fresh movement. However, yesterday market ignored one thing. I updated those details in the membership page when they released. Macquarie Capital, one of the leading investment firm, released the report about TCS that they were very positive on TCS above over Infosys. And according to their analysis, they are projecting TCS to have an upside potential of 27% kind of. So if TCS don't have any inherent negativity means market might react for that today. And please let me know in the comment section why this year so far TCS had been underperforming Infosys despite it got all the good fundamentals. Now coming to FII trade data, yesterday in the cash market, both FII and DII were net buyers. FII net bought for 1,154 crore rupees, whereas DII net bought for 152 crore rupees, which was good and okay. And the important thing we need to notice, this index options FII buy value, which was near 40,000 crore rupees. And it is correlated to what we discussed in the last two pre-market videos. Basically, FII did the same thing what they did on the Nifty expiry last week, this week on the Bank Nifty expiry. Like 2 days of heavy option selling with positive long future index open position of near 70%. Then again on the expiry day, aggressive buying. This is really very good study for us. So probably if it happens again, we can be ready. Anyway, regarding the open interest analysis data, compared to Tuesday night, FII's both long and short put call ratio dropped to around 1.3 from 1.4. Then the retail and proprietary traders value was also down to around 1. So it looks like market today might trade flat or mild positive. I mean, in the yesterday's expiry day poll, in one of the comment section, I mentioned that I am also expecting the negative close today. But after this clear Fed conference and the open interest analysis, I changed my stance now. Disclaimer, please don't make investment decision based on this, sharing just for the educational purpose only. As a summary, US market was okay according to me, but closed mild negative. In line with that, GIFT Nifty for now indicating the gap down opening of 30 to 50 points. Let's see. Then regarding stock open interest, Oracle Finserv, TCS, IRCTC, Ashok Leyland, Emphasis, Apollo Tyre and Glenmark got the short build-up. On the other hand, REC Limited, Sun TV, Axis Bank, Marico, Nestle India and Shriram Finance got an increase in open interest with a positive price close indicating the long build-up. Then about the things to look out, in the aftermarket hours, UK interest rate decision, and in the night, usual US weekly job insurance data, crude oil inventories and Philadelphia Fed Manufacturing Index are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 20 points gap down and remained volatile throughout the day and closed at near 25,380. Thus on the daily chart, Nifty formed a small bearish candlestick pattern with upper and lower shadow. I mean, lately Nifty has been moving within a small range and at present it moved closer to the upward sloping resistance trend line and sustained above all key moving averages. Hence, on the downside, the support is at 25,300. If Nifty falls below this level, it could lead to a further drop towards the 24,900 to 25,000 range. On the upside, 25,500 is acting as a resistance level, meaning it may be difficult for the market to move above this point in the short term. In case of Bank Nifty, it was the star performer and outperformed Nifty by climbing above the 52,500 area. Thus on the daily chart, Bank Nifty formed a long bullish candlestick pattern with above average volumes indicating strength. Additionally, RSI and MACD momentum indicators maintained a positive bias. Hence, Bank Nifty might encounter short-term resistance near the psychological level of 53,000. If it sustains above this level, the rally could extend towards 53,500 to 53,800. On the downside, 52,000 and 51,700 will act as support levels. Regarding the weekly options data, the maximum call option open interest was at 26,000 strike, followed by 26,500 and 25,500, with maximum new call option rating at 25,500 strike and then 26,200 and 25,800. On the put side, the maximum open interest was at 25,000 strike, followed by 24,500 and 24,000, with maximum new put option rating at 24,500 strike and then 24,800 and 25,000. Thus, from options data, 25,500 is expected to be crucial resistance with key support at 25,000. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.